We are, of course, closely watching Netflix. Netflix shares are down nearly 11%. That's after Netflix reported its Q2 earnings yesterday afternoon. And while the company did beat expectations on earnings per share and basically met expectations on revenue, the new subscriptions number is all that anyone focuses on. That number was not good. Netflix had forecast 5 million new sub ads for Q2, but in the end, it added just 2.7 million. On the earnings call yesterday at 6 p.m., Netflix did not have a great answer for why its projection was so off. Now, earlier this morning, Yahoo Finance spoke to Michael Pachter. He is an analyst at Wedbush. He says this report, bad though it is just a blip for Netflix.
The blip happened primarily because they raised price. And the reason you quit a service is you're not using it enough to justify spending that much money. People noticed that the price went up, and then they noticed that there was no content. Netflix is going to pile the content on. They're going to bring people back this quarter and next. Let's see what happens in November when Disney Plus launches. Let's see what happens in the spring of 2020 when HBO Max launches, and later in 2020 when Comcast launches. That competition is going to probably stall domestic subscriber growth for Netflix forever. And this has really never been a question of whether they would hit a ceiling in the US. It's always been a question of when. They hit the ceiling this quarter, I think, when Disney and Comcast and HBO compete head-to-head, you're going to see that ceiling pushing down on top of Netflix's head.
Was it really the price hike? Emily McCormick joins us now to discuss. Hi, Emily.
Hey, so it was really three major points that management was pointing out on the earnings call yesterday that caused this weakness in the global paid subscription. So one was the price hikes, and they said they did see a more market slowdown in net subscription additions in areas where there were those price hikes. Two was a weaker slate of content. So the second quarter was a little bit more transitional for Netflix in terms of some of the shows and new offerings that they had. And then three was a pull forward effect that they said that they saw in the first quarter. So remember that they added more than 9.6 million net additions in the first quarter, so that was pretty high. So they were seeing a little bit of pullback from that.
But walk us through what's happening domestically, because I feel like if people are not Netflixing and chilling, it's because they just don't feel like it. And for the first time in nearly a decade, they saw a drop in paid subscribers in this country. So what's going on there?
That's right. So U.S. paid subscriptions actually fell by 126,000. That's versus expectations for 300,000 getting added. So this is the first time since 2011 that we saw a decline. It's just a testament, according to some investors, that Netflix might be reaching maturity a little bit faster than maybe we thought. And so it's no surprise to really see this stock down by double-digit percentages, even though there was a beat on the bottom line. They're still delivering, but markets are saying we're not going to price this company like a growth stock anymore if it's not showing growth.
It is funny to talk about hitting a ceiling in the US and then Pachter saying, well, new people who are considering subscribing, and then they saw there was no content. That seems a little far to go, no content. I mean, are we now agreeing that every single quarter Netflix has to have enough completely new content to lure new subscribers? Because there are also people, I imagine, who don't sign up specifically lured by one new show, but they sign up because they finally give in, it's kitchen sink, there's so much there that they realize, all right, I got to just subscribe.
That's actually the opposite of what Netflix said. They basically said, we are investing in original content in these new shows because subscribers don't want to come to Netflix just seeing the kitchen sink. They don't want it to be a low price aggregator. They want it to be a show and a platform that they feel will create their next favorite show. And I think that's the case for things like Stranger Things. I mean, I was going through the transcript. They said Stranger Things 7 times on the call. They continuously brought that up. They are really...
You should write that, and that's the headline.
No, but seriously, they were really focusing on that program to deliver. And so that came out at the beginning of July, and so that'll factor into the next quarter's results.
And you mentioned Stranger Things, but they're not capitalizing on Stranger Things. I really feel like they should have a consumer product arm that deals with licensing their brands so they can make money off of sales when they make these partnerships, these brand partnerships. Like, for example, with Burger King. Right. They did the Upside Down Burger, but they're not making money off those sales. Disney is king at doing this.
Licensing
Did Disney
frozen
address
toys.
Totally.
Yeah. Right.
So is
That's
Netflix
a tough business to build from scratch, though.
Yeah, but is Netflix at least thinking about this?
Yeah, definitely. They talked about merchandising, again, really focused on Stranger Things. But I think what you're talking about with Disney, where Netflix falls a little bit short, is they don't create these universes like Disney does. You know, you think about all these animated shows, which Netflix also said that they're starting to push into. They're really able to kind of create an imaginative space that people want to dive into with the merchandise.
I have a theory. I think they're just not accounting for how many people are sharing passwords, but that's just me.
Absolutely. They've tried to, and Hulu has actually, I find, been a lot stricter than Netflix
Yep.
about that. I saw that I couldn't log in once because it said you're already watching. I said, no, I'm not.
I'm right here.
I logged into Hulu and you can see every device it's accessing, and I kicked them all off at
Oh
once.
my gosh.
Yeah, so I like that feature. All right, Emily, thanks so much.